What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification button as well. That way you're alerted to when we release new videos. Thanks to all those who can continue to tune in and give us those thumbs up and leave us comments in the comment section. It really helps the channel grow. But also welcome to those who are new to the channel. The nightly and weekend videos, like tonight's video, we focus on identifying triggers and targets ranging from scalps and intraday trades all the way up through long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts, the broadening formations, levels of support and resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. Also, if you're not familiar with the STRAT, which is the base of our charting and trading method, there is a link to a quick reference PDF in the description of this video. It'll give you the basics to understand the STRAT and the reversals. And then there's also a big online community out there that can also provide further assistance if you want to dive deeper into the STRAT. But yeah, I encourage you to watch the full video. We go through triggers and targets on all time frames, so give some pretty good insight. Let's go ahead and get into the agenda for today. Just so you know what's coming. First, we'll recap the price action from today, Wednesday, April 1st, before we zoom out like we always do and take a look at the week, month, quarter, and year. Then we'll zoom back in, take a look at what we call the 4-hour markers, and then we'll set our triggers and targets for Thursday, April 2nd, and we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right, so starting out with the charts on the 5-minute like we normally do, this is how we take advantage of the proven and repeatable strategy. That strategy being looking for the opening print, first of all, which first traded price of the day, and looking for higher lows at or above that opening print to get into calls, targeting overnight high and previous high a day. Or if we get lower highs at or below opening print, then we want to look to get into puts, targeting overnight low and previous low a day. So you can see here, excuse me, on the 5-minute, we got the open, we gapped up. Don't want to forget to mention that, but we gapped up, and also this opening print traded price or price level here for 5014 is not only the opening print for today, but the opening print for the month and the quarter as well. So just keep that in mind. All right, so we opened, we pushed up immediately, got a little bit of a pullback to the overnight high. Oops, come on now. Pulled back to the overnight high and got that higher low there. So we went ahead and entered calls once we broke back above the high of this 2 down candle that locked this in as the higher low. Continue to move up, got the higher high. Now this big wick on this candle, that was just a flash in the pan. It did it in 1 second. I'm not sure why it's done it yet. I haven't looked into it yet, but we get those from time to time. Usually there's some type of explanation, but regardless, it was too quick to really even count. So we didn't really look at that as a lower low, right? So we just continued to stay in. Also, if we take a look at the internals for QQQ, come on now. Oops. If we bring this over here, we take a look at the internals. The tick, it was above zero line, all morning. The vol QD opened above zero line and was pushing up all morning, and the 80 QD or market breadth opened in trend higher zone and pushed even higher into trend higher zone. So no reason to be looking for puts at that point, or really even pullbacks. So another reason why we stayed in there. And then we did end up going basically double top, slightly lower high. Once we hit the market maker's expected move high of 53.42. If you're new to this channel, not familiar with that, the market maker's expected move, make sure you check out our weekend video where we dive deeper into that. But we went ahead and took profit on half of our position once we made the lower high and lower low on the 5-minute. And the reason why we only took profit on half of that position is because we still had some things in our favor, right? Excuse me. The internals were continuing to push up, and this lower high, lower low. It's just like we talked about yesterday. In order for the higher low to be put in on the 15-minute, we have to get a 2 down candle, right? In order to get a 2 down candle, we've got to go into some type of at least initial downtrend on the 5-minute in order to get the 2 down on the 15-minute. That will then end up being the higher low on the 15-minute, and we continue to push higher, continuing the uptrend on the 15-minute chart. So again, internals pushing up, knowing that this is more than likely going to be a higher low on the 15-minute, we stayed in that second half of that position. We continue to push up past market makers expected move high. We got another little kind of double top situation off of the this daily downtrend line that we've got coming through here. The trend line itself is a bit of resistance, but we don't put a whole lot of weight into it unless it's crossing over some type of horizontal level that we do put more weight into. So first things first, if we just activate this so you can see it a little bit better. All right, this is the 150 fib right here of the April to July pullback. Was it April to July? Yeah, April to July push, and then the pullback in July, essentially creating a bull flag, right? That is the 150 fib extension, and that's also the start of the gap on the daily time frame. And we know that intraday, entries into gaps can also be rejection or bounce points, right? If the gap was below, then it would be obviously a bounce point, but the gap is above. So in intraday, at least, it did serve basically as another rejection point. So we've got 3 levels of resistance here. And so we went ahead and took profit on the rest of our position, except for 2 contracts, which we did let run. We obviously got this pullback, but again, we've got a long ways to go before any type of higher low can be put in on the 1 hour or the 4 hour, right? If we zoom out here and get a better chart, we can see, right? This is the 1 hour, right? Here's the low. We've just been pushing up. We haven't had a 2 down or a higher low this whole time. So, right, we've pushed down so far. We did close with the inside camera the last hour. So yet to be seen whether or not this is going to be the higher low. If not, if we continue to push back down, maybe close the gap from this morning, not the end of the world, because we've still got all this. We can come down basically to 39.52 before creating an equal low, let alone a lower low, right? So we can pull back, set the higher low, and then continue on with the uptrend on the 1 hour. Again, we talked about yesterday. This seems to be the turning of the trend, or the changing of the trend, and sometimes that can be the hardest time to trade, because for a short amount of time you will get a lower high followed by a higher low, or a higher low. Lower high followed by a higher low. And if we look at the 1 day chart, which we'll get to here in a second, we've made that. Possibly made that lower high if we continue to pull back in the overnight and then into tomorrow and Thursday, right? So plenty of room here on the 1 hour to set a higher low. If we go to the 4 hour, plenty of room here as well to set that higher low. Again, 39.52 would be the equal low. So just keep that in mind. We have made a higher high in comparison to this soft higher lower high here on the way down. But again, that's just a soft lower high. The real high that we want to get higher than is this high over here, which is essentially the top of the range, which we're pushing back into. So on the 4 hours, still got a little bit more work to do to have a lot more confidence in the highs that we're setting. And again, just like I mentioned a minute ago, on the 1 day chart, right, we went 2 up, but look at the structure here. We've got a 1, 2 up. We're very familiar with 1, 2 up, 2 down reversals. This would kind of lend itself to possibly being that tomorrow, seeing how we have the wick up top, right? It's not a total failed 2 up in the sense that we didn't close lower than we opened, but it does show that the bulls did try and push up and the bears did reject at least this level for the time being. So if we do go 2 down in that first 4 hour candle of tomorrow's price action, right, we triggered this 1, 2 up, 2 down, which has a magnitude back down here at 39.52. But we don't want to get too far ahead of ourselves, because if this is a change of trend, then we'll be putting in this 2 down that which should turn into some type of higher low. Or even if we go 2 down and then 2 down again, we should at some point put in a higher low if this trend is changing back to up on the 4 hour time frame, right? So patience continues to be the key word. You can see how sideways we've been for 3 weeks, right? Since the beginning of 4 weeks now. Since the beginning of March, we've just been moving sideways. A little bit of a look below and fail on Friday. and Monday through this big push down, but we have pushed back up into the mid part of the range, and seems to be that we're shooting back towards the top of the range, the range within the larger range, right? We've been in this range of essentially 47 to 72 since January, right? And it wasn't until was this March really that we started to drop below it. So we're at the bottom of we have created a range at the bottom of the larger range. So we're trying to push back to the top of this smaller range, and if we can get back above that and then some type of higher low above the top of this mini range, then we can be looking back at possibly going back to the top of the major range. But as of right now, so far this is only a lower high on the daily time frame. We got to continue to push up because we don't have that soft lower high in here like we did on the 4 hour, right? We've really got to get back up to this 58.25 in order to create that higher high. But even then, we haven't changed trend on the day because now we're in a broadening formation, right? We've got just depending on how you want to do it, right? We can go from here to here, right, and here to here, right? We've got a broadening formation there. We can say it might be a little steeper if we count price action more recently, right? A little bit more volatility in terms of high and low. So we could have a little bit wider of a broadening formation in comparison to if we start from back here. But regardless, we're coming from a lower low, making a higher high, which just by definition is a broadening formation, right? So just keep that in mind. Even if we do create that higher high tomorrow or Friday, or even if it takes into next week to make that higher high, that is the situation. But we've got gaps on both sides. Let's just play the triggers, take them to the targets, and reassess the situation at that point, right? We're not making any predictions of which way it's going to go, how far it's going to go, or how fast. I guess how far it's going to go. We do have those built into the STRAT and in our entries and exits, but the time it will take to hit those targets is not known. So with all the whatever we want to call the news around the world, with the Iran and everything that's going on over there, obviously the market is sensitive to those headlines. We had some economic numbers that dropped this morning as well. Didn't quite seem to affect the market that much. So but we still got to keep that in mind as a variable out there that can affect price. But yeah, that's what we've got on those short-term time frames all the way up through the one-day chart. If we look at the week, right, it's a new month and quarter, but it's in the middle of the week. So we're just looking at what we've been talking about basically since the weekend video, right? We got the 3 last week, and then we wanted to watch to see where we're going to get a 2 up or 2 down. And not only were we going to get a 2 up or 2 down, but how would that 2 up or 2 down finish? And this playing out very nicely into a 3, 2 down, 2 up reversal. Granted, it's pushed up quite a bit, so there's not as much magnitude, right? The entry would be at the high of the 2 down, exit would be the high of the 3. So, it'd be a little bit nicer as far as magnitude is concerned if it just did its 2 down and then poked back up here and we closed here at the end of the week. There'd be more magnitude from that close here to up here. But regardless, from the bull standpoint, you would want to see that 2 up, hopefully making a higher high, right, to expand this broadening formation that we've started in this lower part of the range on the weekly time frame now, right? We came from a higher high, we made a lower low, came up, made a soft lower high, and made a lower low here. So, it is technically, if you're counting this soft lower high, it is the start of a downtrend because we've got the lower high, lower low. But if you don't necessarily count these soft lower highs, then it's just kind of a continuation of this slide down, and we've got to see where we would bounce. But the floodgates have been open to the downside. Should the bulls get exhausted from this very fast and quick push to the upside over the last 2 days, at least the triggers have been triggered, so to say, to the downside. If we look at the month, right, we got, let's get a clean chart here, broadening formations out there. right? We got last month in March, we got the 2 down. So we got the 2 up, 2 down. Magnitude was the low of the 2 to the left of the 2 up. So it reached magnitude, but it went past magnitude, then triggering this 1 combo 2 up, 2 down. That opens the gates to 28 as being the magnitude, right? So 1, 2 up, 2 down. The magnitude is not the low of the 1, but the candle to the left of the 1. So again, that would bring us all the way back down to the $28 level. So from that standpoint, it has been triggered. We're still inside at the start of the new month, start of the new quarter. We're just 1 day in. So, there's still the possibility of us going 2 down. But the bulls have kind of, peeked their head in and said, we may not be done yet, right? If we push up and we go 2 up on the month instead of 2 down, then we lock March in as a higher low on the month, coming from another higher low. So we went higher low, higher high, higher low. That just is continuing the trend to the upside, and we could be looking at all-time highs in blue sky territory, down the road. I'm not going to say we're going to see that second quarter or even in April, right? But if this month we have a very strong month and we're able to push up, go 2 up, or even go 2 up in May, then we're looking at a higher low situation, and we could be pushing back to the upside. So just keep that in mind. On the quarter, we ran the 1 combo 2 down, combo 2 up strat, and then ended this quarter with a real big wick on the top side. So we are closer to going 2 down on the quarter than we are 2 up. And if we do go 2 down, then that triggers this 2 up, 2 down, which again has a magnitude of that $28 level. So from the bulls perspective, you want to just continue to push up. It doesn't need to be the fastest thing in the world. It could just be a slow, methodical grind to the upside, but you just don't want to break down below that 39.52 level right here, right? That opens this 2 up, 2 down on the quarter, and it reopens the 1 combo 2 up, 2 down on the month time frame. And again, that $28 level is the magnitude for that move. So just keep that in mind. On the year, there's not a whole lot to say other than watching how the year ends, right? The year already ran its strat just like the quarter did, and so there's nothing left there to really get, right? We went 2 up in January, so that triggered this 2 down, 2 up, magnitude being the high of the candle to the left of the 2 down, which was at 70.08, which was the same magnitude as the 1 combo 2 down, combo 2 up on the quarter. So both the quarter and the month have reached, or quarter and the year have reached their strat. The quarter is closer to putting in another trigger than the year, right? We've got to wait till 2027 to actually trigger something else, unless we were to drop all the way down and make a 3 or a bearish engulfing candle on the year, right? Otherwise, we have to wait till 27 in order for something to trigger. So just want to watch how the year finishes, right? Because if we finish with some big wick on the top and a red inverted hammer candle, then higher probability is to us going 2 up, 2 down next year, and possibly revisiting those lows of April 2025, right? So just watch how the year finishes, right? That's what we've got from a zoomed out view, right? We did a zoomed in view earlier with the micro time frames up to the day. There's the higher time frame view. Let's go ahead and zoom back in at this point and take a look at how we'll attack tomorrow, starting with the the proven and repeatable strategy for early morning scalps, or if things continue to go right throughout the day, those early morning scalps end up being early entries into longer day trades. So that's what we use this strategy for. If I can get my chart working right, here we go. All right, so here we have the chart, and let's get all the 4-hour markers in here, along with a little view of the gaps. All right, so as far as the 4-hour markers are concerned, we've got previous high day at 54.08. We've got previous low a day at 49.62. And it looks like I forgot to move the overnight high and overnight low. So let's just go up here. Let's say overnight high ends up being somewhere around the market maker's expected move high. And overnight low. Let's activate that. And let's say that is somewhere around last month's 50% level, right? So zoom back out here. All right. So we have not only a gap above the previous high a day, but we've got a gap below the previous low a day. So Tomorrow, if we were to see chop, just, up and down action, it wouldn't surprise me. That's, when you got two, bears and bulls pull in, right? Bulls want to fill this gap, bears want to fill this gap. A lot of times you get choppy action, but for at least the early morning to maybe get a jump on, like an early morning scalp or an early entry into a day trade, we want to look for our opening print in comparison to the other 4-hour markers, right? So let's say we open, closer to, actually, let's say we open there, activate, let's say that our overnight high is back up towards previous high day, and we open trading on Thursday right around the market maker's expected move high area. Again, if you're not familiar with that market maker's expected move, check out our weekend video. But if we open there and we push up, maybe we get a rejection off of overnight high, previous high day, and we get a little bit of a pullback before getting a higher low on either that 5 or 15 minute time frame. If we get a higher low at or above this opening trading price or opening print level, then we want to look to get into calls targeting overnight high and previous high day. Now, that's not going to leave you with a lot of magnitude, right? But depending on your entry and your exit and your contract, strike price and your expiration, you could pull off something quick, right? But at that point, you would be really wanting to look for not just overnight high, previous high day. You want to look for that push through that daily downtrend and up into that gap to at least try and get that gap fill, right? But from just the proven and repeatable strategy, the magnitude or the targets for the move is our overnight high and previous high day. Now, if we open here and we push down, maybe we get a bounce off of last week's 50% level, which is this purple dash line, and we push back up, but ultimately get a lower high at or below opening print, then we want to look to get into puts, targeting overnight low and previous low a day. So obviously a lot more magnitude here. When you get to overnight low, maybe you want to scale out of it a little bit. Maybe you take off 25, 50, maybe even 75% of the position and then let the rest run to previous low a day, then scale out again and maybe just leave a couple of runners to see if we get that gap fill or any type of continuation through, right? Now, don't be surprised if, again, like I said, we start chopping, all right? So we got the gap above and gap below that could induce some chop. So just keep that in mind. All right, let's zoom out a little bit more. Again, from the 1 hour perspective, there is a possibility to put in the higher low somewhere down here. So there's a possibility to continue the uptrend. But when we're talking about just the STRAT in particular, we do, for more of a day trade, we do like to look a little bit more at the 4 hour than the 1 hour, right? The 1 hour is going to give you probably that intraday trend. The 4 hour is going to give you that continuation trend, right? The full day trend and any possible carryover overnight into the next day, right? So on the 4 hour, like I said, we've been in this range here for a month now. Make this a little bigger. Make those a little wider. There we go. So we had a 2 up and then an inside candle today. They're the 2-1-2 up in both directions. It's a possibility tomorrow, right? If we go 2-1-2 up to, on that first 4 hour candle, right, you would enter at the high of the 1 and you would exit at the high of the 2. So not really any magnitude there, right? What you could say is that you're in this 1 combo 2 down, combo 2 up. That would bring you back up here to this 58.25 level, right? So if you want to look at it that way, you've got the gap here as well that can help act as a magnet. But do keep in mind, right, we've got this daily downtrend line coming through here. We've got last quarter's 50% level. We've got the 161.8 fib of the April 7 bull flag, right, as well. So daily broadening formation coming through here, daily broadening formation coming through as well. So there's a lot of work to do to reach that 58.25 level. But technically, if we're using this STRAT here, the STRAT reversal, that is the magnitude of the move. So wouldn't be crazy to see that $58 level reach tomorrow. Now, if we go to the downside, if we go 2 down in that first 4 hour candle, you would give you a 2-1-2 down, right? Entering at the low of the 1, exiting at the low of the 2. But again, we've got this gap down below, so you'd probably want to leave some runners, see if we couldn't get that gap filled. Again, if we do that, that then triggers this combo 2 up, 2 down, right? And the magnitude of that move is back down here at this $46 level, right? So there is a possibility for, if the right catalysts are out there, for another very decent move today, which would put us back at the edges of, at either edge of this month-long range that we've been in, right? So that's what we got from the 4-hour time frame. Let's go ahead and switch out to the day real quick. Because again, it is a possibility that today's price action is just a lower high, right? So want to continue to watch that. If we do get that 2 down for the 2-1-2 down in the 4-hour, if it reaches magnitude and goes past it, then that triggers the 2 down on the day. And that actually triggers this 1, 2 up, 2 down, which we talked about earlier. The magnitude of that move is down here at 39.52. Now, even if we trigger that tomorrow, am I saying we're going to reach 39.52 tomorrow? No. What that means is that is the magnitude for that STRAT reversal. It may take 1 to 3 days to reach it, but that would be the magnitude for that move. And in the process, would be putting in a lower high, right? So starting a downtrend at that point, right? Because we're going lower low, lower high, and looking for a lower low to really set the downtrend in. But that is the start of a downtrend, right? So just keep that in mind. To the upside, again, just kind of going with that combo one combo 2 down, combo 2 up on the 4-hour chart. Should we go 2 up on the day, that does give us this combo 2 down, combo 2 up. Magnitude of that move being the high of this 2 down right here, which is 54.44, and also the opening, the opening of this gap. So you'd have a little bit more momentum, kind of acting as a magnet. The gap kind of acting as a magnet to pull you through there, which would then trigger this combo 2 down, combo 2 up, which would again take you back up to this $58 level. So you do have the opportunity to again be at the edges of this month-long range, just based off of tomorrow's price action. All right. So we've looked at the charts quite a bit. Let's go ahead and look into the notes, get back into the notes here, right? So for Thursday, April 2nd, there are 189 trading days left in 2026. And we know that the close price on Wednesday, April 1st was 52.26. We are in full time frame continuity to the upside, meaning the week is green, the month is green, the quarter is green, and the year is green, right? These are the levels that it would take to flip each of those time frames red, right? So as long as we stay above these levels that are listed here, then we're in full time frame continuity to the upside. We know that the market maker's expected move for this week was plus or minus $6.81 from the close on Friday, giving us an expected range of 53.42 to 39.80. As you can see, we're up at the top of that range here. But again, that expected move is right about 70% of the time. It's not illegal for us to go past the market maker's expected move. That expected move is based off of the options chain and open interest and things of that nature. So we talk about how to get that in our weekend video, but that is the expected move. We know we've got the gap just above at 54.44, but we also know that we just created a gap last night from 49 to 48, not to mention all the gaps that we left from the run up from the April 7th low, right? So just keep those gaps in mind. We also talked about from an early scalp or early entry into a day trade. We want to look for those higher lows at or above opening print or lower highs at or below opening print. If we get higher lows at or above opening print, we want to look to get into calls targeting overnight high and previous high a day. If we get lower highs at or below opening print, then we want to target overnight low and previous low a day. We already talked about on the 4-hour. If we do go to the downside, that gives us a 2-1-2 down reversal, triggering at 51.49. The magnitude for that move is 49.62. Should we complete that move and continue on, we do have some extended targets listed here for you. If we go to the upside, we get that 2-1-2 up continuation. Again, not a lot of magnitude there, 53.96 to 54.08. But should we reach 54.08 and continue pushing, then we've got these extended targets listed here for you as well. On the day, if we go to the downside, that does trigger the 1-2 up, 2 down. Triggers at 49.62. Magnitude is all the way down there at 39.52. So, in case we don't make it all in one day, or in case we put in that higher low, then these are those levels that we see price either bouncing or going sideways should we not be able to reach the full magnitude. All right. Now, if we go to the upside, it would trigger a combo 2 down, combo 2 up at 54.08. And the magnitude for that move is 54.44, which would then trigger another combo 2 down, combo 2 up at 54.44. The magnitude of that move is 58.25. So we do have these intermediate targets for you there as well in case we're not able to reach that level. All right, those are for more intraday trades, not necessarily for like swings. Those aren't necessarily targets, right? On the week, we went 3-2 down. It's been a failed 2 down so far. So we went below 45.96, and we actually went as low as 42.01, meaning we reached a couple of our targets before bouncing. Should we pull back again, we do have these extended targets listed out there for you. Now, at the same time, we are kind of close to making a green 3 or a bullish engulfing candle on the week time frame, right? If we do go green 3 on the week, we would have to get up over 58.25. But should we get up over 58.25, we do have some extended targets listed out there for you. We do have 2 days left in the week, so it is a possibility that we would reach that 58.25, with how much SOXL can run in a day, right? So that is very much a possibility this week. With the new month, we have a possibility of a 1 combo 2 up, combo 2 down. Should we get below that 39.52 level, should we get below 39.52, the magnitude for that move is 28.12. But again, it is quite a large move. So we do have some intermediate targets there for you on the way down. And then should we go to the upside on the month, that would trigger this 2 down, 2 up at 62.82. And the magnitude for that move would be 72.36, right? We've got intermediate targets on the way up to that magnitude, as well as extended targets should we reach the magnitude and continue to push, right? Just keep in mind that 74.21 level is all-time high. On the quarter, if we go 2 down on the quarter, that gives us a 2 up, 2 down, triggering at 39.52, and has a magnitude of 28.12, right? That just kind of equals out with the monthly magnitude should we continue, should we trigger this 1 combo 2 up, combo 2 down, right? So 28.12 is a real possibility should we get that push to the downside again. Should we go past it, we've got a couple of extended targets listed out here for you as well. And we know that on the year, we already triggered the 2 up, 2 down. It's reached magnitude, and we just have to wait till 27 for something else to trigger on that 1 year chart. But while waiting for that trigger in 2027, we do want to just continue to watch to see how the year ends, right? But yeah, that's what we've got for today's show. That's what we've got out there for you on as far as triggers and targets, from everything from a scalping perspective all the way up through the 1 year chart. We try to jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed today's video. If you did enjoy today's video, thumbs up goes a long way, right? It doesn't cost you anything. We don't charge anything for this channel. We just want to spread as much good information about being able to trade, right, as possible, right? Again, we said this method that we use doesn't work just for SOXL. It can work for any publicly traded ticker in the U.S. stock market. So if you can take any piece of what we've tried to put out there today or in any of our past videos and apply it to your strategy, we're just more happy for it, right? Or if you adapt our whole strategy, even better. But if we can just help retail traders get a little bit better and get our piece of the pie out there, then that's all we're looking for. So we'll go ahead and close the video out like we normally do. If you're watching this Wednesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Thursday morning or Thursday during the day, we hope you get some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.